Welcome back to Bazaar Corporate Radar. Let's talk about Eicher Motors now, which is under pressure on the back of its February auto sales performance. The commercial vehicle sales have slowed down across the industry. For Eicher also in February, CV sales surged nearly 2% and it didn't surge, it just went up 2%. To discuss more on their February performance, Vinod Aggarwal, the MD and CEO of Volvo Eicher Commercial Vehicles, joins us now. Mr. Aggarwal, thanks a lot for joining in. You know, we've been speaking about this ad nauseum as to how the commercial vehicle industry has faced a slowdown over the last couple of months. Your own numbers were a low single-digit growth, but some of your peers have actually reported a big degrowth in this month. What is going wrong, and when do you see a recovery in the commercial vehicle sector?
Actually, I will not say it's slowdown. It is because of the large base impact. Because if you look at last year quarter four was very strong, and there was also some pre-buying that happened due to BS6 stage 2 norms that became applicable from 1st April. So as a result of that, last year quarter four was extremely strong. In fact, if you now look at the March figures, March 2023, March 2023 was even stronger. So therefore, you will still see lower sales in the current month as compared to March 23. So therefore, I would not say it's slowed down, because if you look at overall YTD figures, if you look at heavy-duty trucks, still there is a growth of 6%. In buses, there is a handsome growth of 32% YTD. Even last month also, the bus industry grew by 31%. Light and medium-duty trucks and small commercial vehicles, both these segments, they have dropped by around YTD basis around 4 to 5%. That also because last year itself, these two segments were at the earlier peak of 18-19. So therefore, I would not say it a slowdown. I will say it a technical correction, and you will see growth coming back. That's what my feel is.
Okay, so you will see growth coming back, and you're saying because of the large base of last year, the growth percentage looks very small. Got it. But you know, even if you look at year to date, the entire CV sales for your own company, right? It's barely been a 10% growth, 9.7% to be precise. When do you see double-digit growth come back for Volvo Eicher? Will it be in FY24 itself, in the early part of FY25? And what are the big trends segment-wise, according to you?
I think, first of all, this 9.7% growth in the current situation is a good number. It's almost equal to double digit. And we have been growing better than the industry. If you look at all segments, our growth has been better than the industry growth. In heavy-duty trucks, in fact, our growth is almost 17%. And light and medium-duty trucks, where the industry had dropped by around 4.5%, our growth is around 4-5%. So therefore, it is a mix of all these segments, due to which you see 9.7%. But of course, if the industry grows better next year, we should continue to do better than the industry. That's what our objective is, and we are very, very optimistic.
Can you give me a number, sir, for FY25? You're saying you'll do better than the industry. What could the industry growth rate be, and what would Eicher's growth be in FY25?
I would say industry growth should be almost like double digit or around that, and we should also be better than that. I can't give you the numbers, of course, because it's very difficult to project that how much it will be and how much we will grow. But of course, all our strategies, if you look at our product range, we are continuing to expand our product range. We are continuing to expand our network. So therefore, these are all the steps that will help us to grow better.
Okay, the reason I asked you this question is about industry growth is that, some people in the market believe that the CV cycle has peaked for now, because we had 20-30% growth in the last many years, and that slowdown is now kicking in. You may call it high base, you may call it moderation growth, be that as it may, there is a narrative in the market that the CV cycle has peaked. Would you concur with that view?
No, not at all. Because you study the trends of any past recessions. Whenever the recovery has happened, the recovery has led to a new peak. We still have not reached the earlier peak. So the growth has been going on for last 2 to 3 years. and still there is a lot of scope for growth, and fundamentals are very strong. If you look at the economy itself is the biggest factor of growth. Then replacements are continuing to be very strong, and third is infrastructure investments. All these fundamental factors point towards better situation for the commercial vehicle industry. Therefore, I do not agree that it has peaked. You will still see more growth in CV sector.
Okay, hi, good morning, Mr. Aggarwal, and good to hear your optimism. You have repeatedly said that you don't believe that things have peaked and things will improve. So good to hear. Give us a couple of numbers though. Since you're growing faster than the industry, what is your updated market share in various segments? Point number one. Point number two is, I recall, a few months ago we had a conversation where you said there is scope to improve margins even from there, from I think that high single digit number. Tell us, is that still on? If yes, what could the number be? So on market share and margins, please go ahead.
First on the market shares, in heavy duty trucks, our market share is now 9%. It was 8.2% last year. And in light and medium duty trucks, which is 5 to 18 ton, our market share currently first 11 months is 34.5%. Last year it was 31%. And in buses, our market share is 24%, both light and medium duty and heavy duty buses put together. So therefore, market shares are improving. As far as the margins are concerned, margins also are better as compared to last year. But of course, we would like it to be even better. Still, EBITDA margin is around 8% plus, and operating margin after depreciation is 5% plus. So we would like it to improve further. But
Okay,
of course,
all right, we leave. Sure.
All right, we'll leave it there. Thanks very much for joining us, and good to hear that commentary. Thanks very much for your time.